Hello everyone, and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Curtis, what have you learnt by having a few days off this week and being away from what's happening in the industry?
You know what, Phil? Probably like you, I suspect. You don't totally switch off, do you?
No.
You're on holiday, but the laptop's there and you still look at the headlines. So what I've learned is that it was a busy week whilst I was away. I've just been frantically pulling together some headlines for this pod, and plenty happening this week with the new car sales figures. We've got an update on Lithia and Pendragon, and we got some financials. So pretty much a standard week, really, isn't it?
Yeah. We can't. We're not allowed to have time off, me and you, Curtis, with this. We can't.
No.
So we've got to keep on top of the headlines and what's happening.
I'm rather hoping you'll explain the whole Lithia Pendragon update.
You joke? Yeah, we like to keep the best of where we're up to with it. But
I thought I had my head around it last week, but it's all moved on, isn't it?
It's all changing. Yeah, I mean, in terms of shout outs this week, please do stay tuned for the entirety of this podcast. We've got a quick catch up with Robert Forrester, who will be sharing their latest financials for the full year in terms of their financials that came out this week. And as always, Robert will share with some great insight and data in terms of what they've been doing and the performance of Vertu Motor Group.
Yeah, definitely. And speaking of Pendragon and Lithia, maybe if we just give a little roundup now, because the story is likely to move on in 7 days' time. So this is where we are, I think, at the moment. Now, correct me if I'm wrong on any of this, Phil, because you'll be much closer to this than me. So this time last week, we had 3 offers on the table. There was Lithia, there was Hedin and Penske, a joint offer, and also AutoNation. They'd joined the sort of bidding war. And I think they were all for 32 pence per share, if I got it right.
Yeah, I think they were similar around sort of 32 pence, at the time. I know AutoNation, the former employer of obviously Bill Berman, the current CEO of Pendragon, they were the last ones, I think, to place a bid worth 32 pence per share, and could still increase. We don't know yet.
Although my understanding is their bid has been withdrawn. I think AM reported it on Wednesday.
You are on top of it, Curtis.
Yeah, I am, yeah. So Hedin and Penske, for the time being, they've withdrawn their offer. That's off the table. And Lithia has actually come back with a counter bid at 35.4 pence per share.
Yes, and there is, I believe, a vote that took place this Friday, just gone. So yesterday, if you're listening on Saturday morning, and that was where I believe Pendragon were voting whether to accept or reject the Lithia bid. Now, what we don't know is that accepting it as a deal or accepting the terms of the offer, because we know that there was different offers on the table and the way it was structured, and there was things around the OEMs involved with it previously that which had been removed out of it. So we're not quite sure. I'm presuming this will be a case of they accept it in the terms of the offer, and then it'll go from there. And there's still obviously opportunities for other rival bidders still to come in. So it's a continually moving feast at the minute. I think a lot of the analysts are now saying that offer on the table, the latest one from Lithia, is likely to be accepted on its value and the terms of the offer. But as we saw with Lookers recently, things can change overnight with this.
I'm glad you qualified that, Phil. But for the time being, the car dealer have actually done a really good roundup. So I urge you to go there for some commentary on the current offers, how it's looking, and where it's likely to go. But as I say, this could all change by the time you switch off the record button, Phil.
Motor Trade Radio podcast, powered by eBay Motors Group.
So headlines this week are from AM Car Dealer and Motor Trader, and we've got the SMMT figures for September, so we'll take a look at those. So new car and van registrations. We have an update from eBay Motors Group with their market view for September, tracking used car trends across price, demand, and dealer stocking levels. We have some financials from Car Giant, an update from Motorpoint, and of course we'll have that conversation with Robert Forrester.
We will. So over to the first headlines, and we're covering the story in AM Online, obviously reporting that the registrations for September are up 21% year on year, with fleet sales also rising significantly year on year. So your fleet was up 40.8% year on year, taking the market share in 2023 for September to 52.5%. Marginal increase there for private registrations, so from 116,000 last year to 122,944 this year. That's a rise of 5.8%, giving a 45.1% market share. Now, the question is, where does that take us in terms of year to date? Well, year to date, it takes us up just over 20%, so 20.2% year to date, year on year. And that's private fairly stable now, level for year on year at 1.8% increase and a 44.8% market share. But you can see where the growth is, that fleet is up 42.3% year on year, taking market share up to 52.8%. Business up slightly, 14.4%, but from a very low base point and giving a market share of 2.4% there. So certainly the market is now shifting to the channel of fleet, and we saw that over recent months, didn't we, Curtis? And that's obviously continued into September.
Yeah, so it's a good result for September. Obviously, huge month for the industry because it's the plate change. And it's interesting to see how it compares with previous Septembers. So this is the third successive rise in September, but we are still a long way short of those pre-COVID levels, which the SMMT calculates at 21% behind those pre-COVID levels. But as you and I were talking, it depends how far you want to take those pre-COVID levels to be, because if we look at those years, 2018, 2019, the market was typically over 300,000 units, but you only need to go back a couple of years before that, and the September market was over 400,000 units. And just to recap, this September was 272,500 units. So it's a welcome improvement. It's heading in the right direction, but still a long way to go.
Yeah, and I think the question with this is, as you say there, the market average between the year 2000 and 2019 is 391,000 compared to this year at 272,000. So you are looking at a 30.4% downturn on pre-pandemic averages over the pre-pandemic decade there. But again, as you say, Curtis, moving in the right direction. I think what might start to come out of this one is that, some of the product that was probably expected for September might be falling into October. I know there's a lot of last minute activity, both in the retail space to try and get vehicles registered and on in the market. Some of these vehicles may still be on ships somewhere in the middle of the ocean, but they're on the way, and there's a lot of strategic plays being played out at OEM level to try and close off this year. At the same time, to play about with the ZEV mandate that we've spoke about recently. But I think you've got some figures in terms of fuel performance as well.
Yeah, in terms of fuel for the month, battery electric vehicles, which is really the part of the sector that we're really focusing in on now. Registrations were up 19% in the year to date at 45,323 units. So, welcome rise. But of course, this was all before the announcements from Rishi Sunak on the ICE ban going back to 2035. So we'll start to see, I think, over the coming 3 or 4 months, how that will affect BEV registration. So they are up, they are heading in the right direction. Petrol was up 15%, diesel down 4.2%.
Yeah, and just briefly before we move on to the LCV market, looking at the European markets, Italy up 22.8% to 136,000 registrations. France, not as good, up 10.8%, up to 156,000 registrations. Germany, down 0.1%, but with 224,000 registrations over there in Germany. And Spain, marginally up to 68,000 registrations, up 2.3%. So a lot of disparity across some of our European markets in terms of year-on-year performances for September.
Yeah, it really is a mixed bag, isn't it? It's very difficult to spot any consistent trending across these different markets.
Exactly. And moving over to Motor Trader, they briefly covered the LCV performance for the month of September, but really focused on the EV sector. So that they've said the title is that plug-in van grant fuels record sales of battery electric vans in September there. So UK van registrations rose for the 9th month in a row in September, up 21.8%. And that's a growth up to 44,760 vehicles registered in September.
Yeah, and so as you say, it is a record for electric vans, 14,296 registered since January. And that means that battery electric vans is actually taking a 5.5% market share. So coming obviously from a very low base, still a long way behind the BEV car market, but again, heading in the right direction.
Exactly. So moving back over to Car Dealer, and they've covered the eBay Motors Group story this week, and they've said that eBay Motors Group reports dip in used car prices, but stock levels remain stable, saying that used car prices have dipped 1.1% to 17,536 in September, and that dealer stock levels averaged 47 units compared to 48 units in August of this year. But I think we've got the detail behind this story, haven't we, Curtis?
We have, yeah. So it was a pretty stable month for the used car market across the three main criteria that eBay Motors Group looks at in terms of pricing, stock levels, and demand. So in terms of dealer inventory, this is quite an interesting one because stock levels averaged 47 units compared to 48 in August, while car supermarkets actually dropped from 331 to 303 units. So a lot more stability in the franchised and independent sectors. And in terms of what dealers are stocking, petrol continues to account for over half of all dealer inventories listed on motors.co.uk, with a 5% year-on-year improvement to 53%, while diesel slips 9% to take a 39% share.
Yeah, and Lucy Tugby, who's the marketing director at eBay Motors Group, has said that September proved to be a relatively stable month for used car market, with consistent month-on-month tracking across stock levels, demand, and prices, and that while the 73 plate charge will have generated welcome part exchange volumes from franchise dealers, their data suggests that many of these vehicles are still being processed and prepared for sale over the coming weeks, which it's always that last minute thing. You don't necessarily see the impact in terms of used vehicle market from that last minute activity of new car registrations in a key plate month of the year.
Yeah, you're right, and it will be interesting to see how those part exchanges are reflected in October and November. So we'll see next month. So after the break, we'll be having a chat with Robert Forrester, CEO of Vertu Motors, taking us through some of the highlights from the group's year-end results.
You're listening to all the chatter that matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
Well, welcome back to the podcast, Robert. Great to have you back on. You've joined us to chat through some of the highlights from your 6-month interims to the end of August. And these are the first 6 months to include the Helston acquisition from last December. So to give our chat some context, how has the onboarding of Helston gone so far?
I think it's gone pretty well, actually. We had an integration plan. We had a formal committee and a project leader, and it obviously involved shipping at some times up to 50 people from the rest of the country down to the southwest, which they thoroughly enjoyed. We've now got the businesses on our own systems. We've now got everything rebranded, either Bristol Street Motors, but predominantly Vertu. All the web things work. Clearly a lot of training required. So we've done quite a lot to build the Vertu brand, particularly sponsoring Plymouth Argyle, Exeter Chiefs Rugby, Somerset County Cricket. We've been to all the big shows down there. I mean, it's a great area for cars.
Yes.
Solid demand down there, and we're now a major player. So I think actually we've got to be pretty happy. Have we finished? No, but to be honest with you, we haven't finished any of our business, and we've had some of them 17 years. But I'm pleased with where we've got to, and I think there's plenty more to come. I think we need more resource in the dealerships. I think we can do more volume down there, both in after sales and in sales. So there's big recruitment going on, but I think we are happy with where we are.
Because I think last time we had you on, Robert, you described the Helston acquisition. It's probably one of the more complex acquisitions that you've done or anyone's seen in the industry. But from your description there, it sounds as though the integration is going according to plan.
The actual mechanisms of purchasing it was torturous in terms of buying and selling. But actually the actual execution has been good, and we're doing a lot of training down there. We get Dave Anderson, which many listeners will know, trainer from California, been over to the UK a lot. We get him to do an hour Zoom call once a month to all the managers in the former Helston businesses, going through our culture and how we actually do things, and a lot of that does follow Dave Anderson's principles. So we're putting a lot of investment into developing people, and there's been quite a lot of internal promotions, divisional promotions from within the Helston ranks. Our BMW sales director for the whole of the UK, is a Helston man from down there. So there's a lot of opportunities for people, and that's always good, isn't it, when people see that?
Yeah, definitely.
And in terms of the financial announcement, I mean, you've announced some record revenues, up 11.7% year-on-year profit growth. Do you want to? And I know within your financial announcements, you've talked, obviously, I think I watched some of your updates this week about the investment into apprenticeships and things like that. But do you want to talk us through some of the highlights of the results?
Yeah, I mean, the financials are fairly straightforward. Even though we've got agency in Mercedes, which obviously reduces turnover, turnover's gone up to record levels, 2.4 billion in the 6 months. Profits up, which is good. Dividends up 21%. Actually, net debt was up, which we don't have a lot of debt. Obviously, we don't really use used car stocking loans and stuff like that. But we have pushed more. We did push more stock in back end of H1, which will certainly be reducing front end of H2. That has actually positively impacted our sales rate, I'm pleased to say. The operational highlights for me may seem slightly esoteric, but we've had, as with the rest of the sector, phenomenal rises in Motability volumes, very strong margins in new fleet and in used cars. Our used car margin in H1 was actually higher gross profit per unit than in H2 last year, which is good. On the downside, we actually had a lower used car volume, down about 5.7% like for like. But that was because, as you'll know, Phil, we had, we were doing big 0% events, big media splashes, and you can't do 0% at the moment. So we had to rebalance volume and margin. And we're through that now. We've got, prior year comparators, we've got no more 0% events in. On the after sales side, really good actually stuff. We completely looked at our strategy of retaining and recruiting technicians. I'm pleased to report we've got 54 more technicians at the end of August than we had at the beginning of March. And that is a massive increase in core technicians. That's not even in the new dealerships, that's purely like for like. So that should bolster our after sales revenues and speed up the time it takes to prep used cars, which has been a massive issue for the business and for the sector. Everyone's got older used cars, they need more cosmetic, they need more mechanical. It takes 4 hours, not 2 hours. And I think some of the pressure in used cars that has been around the length of time it takes you to prepare cars. So I think we're happy with that. The other highlight is accident repair centres, smart repair businesses going great guns, significant improvement in profitability and margins. Our strategies of which work providers we work with in accident repair centres has been phenomenally successful, far more successful than I ever thought it would be. So the final thing to say is, not many people know, but Bristol Street Motors has the highest prompted brand awareness of any franchise automotive brand in England, which it never used to have. We've grown that really quite substantially for a variety of means. And I think that powers our business really. Bristol Street Motors website is their engine room of what we do. And, we've got significant, I think it's important we sell lots of cars in the next 3 months. We've got, big TV campaigns. We're hardly off the television in the next 3 months, to be honest.
And you make a point. I mean, you can visibly see it in terms of that investment in that Bristol Street branding awareness, right across various different medias and sporting events and things like that. You mentioned earlier the obviously the technicians, and I watched the investors update, and you made a point obviously in that about the payback from investing in those technicians in terms of that return on investment, getting those technicians in the apprenticeships into the business for future revenue because of that opportunity in that after sales market.
Sorry, Phil, can you repeat that? Because Andy Goss tried to ring me.
So saying you made the point obviously about that technicians and the aftermarket and after sales investment, and I know that on your investor update you made a point obviously the investment and time that you put into recruitment around that apprenticeships, around that technicians, because the payback that you get from that area is huge for the business going forward.
Yeah, I mean, we've obviously looked at this, and paying technicians has clearly moved quite substantially forward because there's been a scarcity and market forces obviously have an impact. But you actually look at how much profit a technician actually generates for a motor retail business, and we worked it out after paying the technician, it was about £115,000 per technician per year in retail service and parts. Now, it's a big number, but bear in mind we have big premises, big overheads, there's a lot that's got to cover. But the more technicians you have, clearly the more gross profit you generate, assuming you've got the work. And I don't think we're short of work, I think we're short of technicians. So we've had a real push, variety of things, flexible working for technicians, 4 days on, 4 days off, that sort of thing. Massive increase in apprentices coming through, though that takes 3 years. Looking at transfer and conversion, so people can come in from the likes of Quick Fit and Halfords, and we can train them in very short periods with the manufacturers to get them up to franchise standards, and they become franchise technicians, and I think that's a good thing. We've actually put more marketing spend around technician vacancies, so we have been pretty focused actually on making sure that we had the right strategies, because if you'd have asked me 6 months ago, and the answer would be different to the question today, but if you asked me 6 months ago what the biggest problem was, it was lack of technicians. Full stop in our business.
Yeah, so it's a clear investment in future, isn't it? That's as you say, that future growth. You can't just, when you get the demand, you can't just go out and find those technicians to support it, can you? So you've got to build it for the future, haven't you?
Oh yeah, it's vital. It's vital for today. Never mind the future.
And Robert, you've talked about after sales, how it performed across the business over this period from March to August. Were there any other highlights in terms of vehicle sales across new and used? I mean, I was interested in what you said at the top about Mercedes-Benz division is the only one on pure agency at the moment. So it's
Well,
you're starting
Volvo's
to see
there as
the
well. Volvo is there.
yeah.
Actually, we've got 2 on the job now.
And how have new sales performed, across those brands?
Well, I mean, you can see from the SMMT numbers that the volume. Well, I think it's early days for Volvo. You wouldn't like to comment on Volvo, would you? But Mercedes has been at it since the 1st of January.
Yeah.
And implementation, I think, was very smoothly. I think we've said that, in terms of systems and everything. I think they did a great job. Clearly, volume has been down. You can see that in the SMMT numbers. The question is why, and I think it's way too early. And there's far too many factors. The problem with our industry is it's blinking complicated.
Yeah.
There's lots of reasons why volumes can go down with the manufacturer. So I don't think we can ascribe that to agency per se. I think we have to wait and see. And actually, I think our volumes in Mercedes have significantly improved actually in the last couple of months. So I don't think you can, after 9 months, conclude very much, if I'm honest. You've got to. There are a variety of reasons why volumes can go down with the manufacturer. And I can give you plenty of examples in the past in the franchise model where volumes have gone down. So I don't think you can say it's agency.
Yeah. Sure.
Overall, and actually this was fairly well publicised, wasn't it, post our results? Because I did sort of tell people what I thought. The battery electric vehicle demand in retail is weak. I mean, the SMMT said that yesterday. I was pleased that they actually had a similar view on life that I did, which was useful because it would have been embarrassing had I said something that wasn't right. But let's be honest, there are no incentives from the government to purchase battery electric vehicles, which may not be as convenient from a charging or fueling point as a traditional car, and indeed are more expensive. And that is clearly a problem. And whereas the fleet market has seen, surge in supply, pent-up demand from post-pandemic, which wasn't serviced by the manufacturers, really plugging that. I think, interestingly, salary sacrifice for electric vehicles is shifting to maybe, to some degree, retail demand from retail into fleet, which actually skews the numbers a bit, I think. We've been very successful supplying salary sacrifice schemes. But if you're going to get to 80% by 2030, you're going to have to crack the retail market. And no one has a real idea on how to do that, really.
Yeah. There's more questions than answers, isn't there, I suspect, Robert?
Well, I mean, the government, don't get me started on the government. I mean, what went on there? What went on there?
Well, Robert, whilst we've got you on that theme, I mean, in terms of new car sales and stimulating the retail sector, what sort of impact do you think moving the ICE ban back 5 years will have on retail demand for battery electric vehicles?
None.
None whatsoever. No.
Well, I mean, it's certainly not going to accelerate it, is it? I think we might have found ourselves in a bit of a bind where the government's pronounced, don't worry, customers, you've got till 2035, when actually the zero emission mandate changed absolutely nothing. And 80% of cars have got to be battery electric vehicle by 2030. But the customers now got the impression they don't need to bother. I think that's an extreme view of it, but I mean, that's broadly where we are. And that is unhelpful. There's plenty of other words you could use to describe the situation, but unhelpful is one of them. And I actually couldn't believe it. I couldn't believe that they would make such a public announcement, which, I think JLR described it as pragmatic. I think that's a decent word. It certainly reflected some of the issues that there are, motorway service stations now having security guards on electric charging points to stop fights. I mean, you couldn't make some of this stuff up. John Lewis Insurance pulling out of electric vehicle insurance. You know, and the press with a right mindset of negativity over the whole subject, haven't they? I mean, they can't pick the paper up without finding an article about electric vehicles. I am about to get my first electric vehicle, which will be quite interesting. I'm assured it can get me to Turf Moor and back on one charge.
Okay. I'm sure you'll let us know. Or maybe not, depends on the manufacturer.
I'll be calling at your house to charge up. So
You're lucky. You'll be lucky. Yeah. You might get a cup of coffee or tea, Robert, but you certainly won't get a charge because I've no charger.
So I think to be honest with you, I feel really sorry for the manufacturers because there's been this real push. Why we went 5 years before everybody else was a mystery. I mean, that was odd. We're in an integrated European car market. I don't understand why Boris did it, but then Boris wanted HS2, which made even less sense. So, you know, we're in a bit of a pickle, aren't we? And the manufacturers have put all the investment in. They've got all their plans. You know, they're electrifying. The government told them to do it. There are reasons why it's a good thing. And then the government sort of keep moving the goalposts. And I don't necessarily think that's the last time they'll move them.
No, you do feel that, because you say, you know, it's okay saying you've got another 5 years, but at the minute, as it stands, you've got 20% availability. If, you know, that's on the assumption that the OEMs haven't gone EV by that point anyway after 2030. So it doesn't really give the consumer
a lot
choice
of our
after
manufacturers,
2030.
A lot of our manufacturers will be EV only way before 2030.
Exactly.
Yeah.
So, you know, I don't think the British public have any clue at all what is going to happen because it's going to be predominantly EV.
Yeah.
And to get predominantly EV, you might have sky-high ICE charge prices to push people into BEV. There might be a complete and utter lack of supply. Well, if they've gone pure EV, there's definitely lack of supply. It's zero. So I think there's a lot of water to go into that bridge in 2 general elections.
Yes. Yeah. And like you say, it just doesn't help because of the messaging that it's sending out to the consumers.
It is, but I mean, we've got to do our job, and we've got to educate the public, and we've got to be honest about the challenges. Make sure we don't sell electric vehicles to people who shouldn't have one. There are plenty of people who should have one, and you know, we have to do our best as an industry to try and educate the government. I think because that worries me that they don't really understand it all.
Yeah. Well, yeah. I mean, we're in danger of getting into deep politics here, Robert, and we better try.
Well, I mean, that's the reason we're getting into deep politics, though.
It's what they've done.
Brutal,
yeah,
it's a brutal fact that the government has decided that ICE engines are a negative thing and have decided to ban them. So there we are.
It's creating
is it?
Yeah, no, it's creating confusion and complexity and a significant revenue business for the UK or sector, isn't it? That's with the
and then you've got this rules of origin thing, which is another mystery to me actually, where we've got tariffs potentially. So I think there are quite a lot of things. I think we've got as an industry just get our heads down, do our best, sell the cars we've been given, and run businesses. And we'll have to leave the politicians to be politicians, I think, and hopefully the SMMT and the NFDA have some success lobbying.
Yeah, and getting some clarity and some, getting that, because I think at the minute the message was sent out, it was more about the confidence in the UK and that they keep moving things and there's no clear direction and things change. Then how do you invest? How do we, generate investment?
Yeah, but bear in mind, the manufacturers are not investing for the UK car market, are they really? We're 3% of the global car market. We're sitting in a European integrated car market. So this idea that the manufacturers are doing things specifically for the UK, I struggle with.
Yeah, they ain't waiting for Rishi to make his mind up, are they?
Not really, are they?
They're not sat there going, let's see what Rishi's got to do next and we'll plan. But anyway, September. Let's bring this back to how September has gone because, we know 21% up year on year for September. Still, depending on what pre-pandemic period you look over, 20 to 30% still behind a pre-pandemic September with some significant heights in some of those September performance. we're talking about ZEV mandate and, reports where OEMs are holding back a little bit on EV for this year now because they want to try and secure the 22% for next year, which the ZEV mandate is a whole world of complexity in the way it's set up and buying and selling credits, and that you can take future debt on and pay 3.5% and not pay any fines. There's all sorts of complexity, but it's starting to play into OEM strategies and things like this, and reports where, we may see the registrations, but we're not necessarily seeing the car itself in the month of September. But we'll try not to go there. How was September? Was it as expected? And do you think whatever happened in September,
Well, I mean,
we'll see it into
it was a
October?
strong month. It was a plate change month. It is, significantly the biggest profit month in our second half. Our second half goes from 1 September to end of February. Clearly, there was buoyancy in the new car market. Actually, I thought retail performed well. The S&P numbers were strong on retail, I thought, compared to where we've been. Fleet was very strong. There was, clear appetite from the manufacturers to generate registrations. It felt pretty normal. Actually, the world is getting far more like it was pre-pandemic. There's no doubt about that. It's got some slight different tinges, but life is getting back to normal. Used cars, I think, are the interesting one, more than new, actually, in September. Because as we said in the statement, and I thought the cap commentary was fairly interesting. Depreciation of used cars, I think I'm right in saying this, was the biggest fall in September since September 2008.
Yeah.
Which, let's be honest, wasn't the best of years, was it?
Yeah.
So I think that's interesting. And is this the start of a depreciation trend on used cars? It was, in my view, quite highly concentrated. Not in BEV, where it's been concentrated. I think BEV's all right, actually. We've gone on and bought hundreds of electric vehicles, used cars, recently. The problem was in the higher end stuff. And I think that's where the problem was. And for a variety of reasons, but clearly, I think I'm right in saying used cars are 25% more expensive than they were in Jan 21. And I think that's going to edge backwards. And I think stock control, stock turn, speed of prep is going to be absolutely crucial. Now, we don't know what's going to happen in the next few months, but we have set our stall out in terms of where we want to be. And I'm sure everybody else has similar views, to be honest.
And Robert, final question for you, and really follows on from that. What is the short to medium trading outlook for the group?
Well, I think retail demand is actually pretty stable. Probably more stable than people would think with very high interest rates compared to historic. I don't think there's shortage of inquiries. I actually think the issue will be used car residuals, if there is an issue. I think on the after sales side, it's all about resource and generating gross profit. And I think having more technicians gives us some optimism. We hope to execute a few acquisitions along the way, and control costs. So business as usual, really, isn't it? I think we just got to take each month as it comes, get better as a business. I did speak, and Phil probably heard me in one of the broadcasts. One of my biggest sort of focus areas is conversion at the moment and sales skills. I think we've been through a period where there were more customers than stock. We became order takers rather than sellers, and those old-fashioned concepts of info seek, test drive, objection handling, closing, which, to be honest, are crucial, are much more vital than in the last 3 years. And we've got a big task to upskill and get back to those basics in our business.
And you make an interesting point in the interims about used vehicle sales volumes are improving. What about the supply? How's supply looking at the moment for used vehicles?
I think supply is I wouldn't say normalising, because there's this 3 to 5 year age group which is just missing. and it's going to weave its way through. But if you want to buy cars, you can buy cars.
Yeah. No, I think you're right, and there's some good points. I think we are. There is business to be had. There is opportunities out there. There is product to be found if you're prepared to put the effort in and find it. I think everyone, and I hate using the term, but we talk about back to basics. But we are in that place now, aren't we? That
100%.
we're back into a depreciating marketplace. Condition, prep, ownership, history,
and actually,
spec
last
is all
year,
key.
from this point on, last year the world got harder. So we've got comparatives now that weren't fantastic anyway.
Yeah.
So the aim is sell more cars than last year, like for like. That's the aim.
Yeah.
Move the stock, keep it moving, buy cheap, sell, normal stuff. And we are very, very focused on that, I have to tell you.
And I think you made the point, and it's always been said that we can talk about the politics, we can talk about all that stuff, but there's an element that there's certain things that you can talk about and help influence, but not necessarily control.
I mean, one of the things we say in our business is we control 80% of the factors that determine our success. There was no point fixating on the 20% you can't control because you're wasting your time. Yeah. You've got to understand them because they might have an impact on you, but no point worrying about them. Yeah. So if we increase conversion by 2%, we would be flying.
Yeah. Get your margin, reduce your cost, conversions, just those little incremental movements.
Yeah.
I mean, we could talk all day, and we better not, because you've got other things to do. You Andy got a call back as well, so we'll let you go. Fantastic as always to catch up. I mean, as I say, if you do run out of charge, by all means, give me a shout. I'll bring you a flask. Not sure I can help you with the charge, but I'll certainly bring you a flask of coffee or something, Robert. But
no problem.
Pleasure and fantastic results, and well done with the onboarding of Helston and the performance as well. So thanks for catching up.
I listen to the show every week, and you do a great job for the industry. So well done, and thanks for having me on.
Thanks, Robert. Speak to you soon.
Thank you very much for that. Thanks, Robert. Well, Phil, I think it's safe to say that was a fairly upbeat Robert Forrester.
Yeah. I mean, in context to the performance and the results and the headwinds facing the sector, I think they're fairly upbeat, and obviously with the Helston results in the figures there is a positive move in terms of onboarding Helston. And I know that following Robert this week in terms of some of his interviews, he has taken the opportunity to air views towards the ZEV Monday and the 2030 deadline, whilst talking about his performance there. So, continually trying to get that message across to the UK government about what's happening in the marketplace.
Yeah, and we've got some more financials in our next two stories. So heading over to Car Dealer, the headline there is Car Giant makes bumper 42.3 million pre-tax profit in 2022. So Car Giant, it's a single site business based in northwest London, but it's huge. It's a 45-acre site. I mean, it's an absolutely mega site. And the story says that typically it's advertising nearly 5,000 cars in stock, with around 2,000 for sale at any one time. So accounts that were just filed last week or so for the group said it banked a £42.3 million pre-tax profit on revenues of 397.9 million in 2022, and that was pretty much thanks to a £18.6 million boost from the revaluation of its property investments. Now, it is holding on to some valuable land assets there, because it's actually based very close to, I mean, how fortuitous could this be? It's located very close to Old Oak Common, which up until probably, 3 or 4 months ago, no one had heard of Old Oak Common, but that is pretty much where HS2 the bit that will be completed will be coming into London. So it's obviously of a lot of interest, and property values there are seeing a bounce. And Car Giant have benefited from that. So, being in the right place at the right time.
Yeah. I mean, as you said right at the outset there, I mean, it's 45-acre site there. It's a significant site. The big operators in that inner M25 London territory there. It's a machine when it comes to throughput of vehicles. I've observed these guys for many years in what they do. But again, like you say, they're sat on some very valuable land and property down within that M25, but still performing very well in terms of profitability and volume throughput of vehicles. But as you say, they're taking advantage from that input of property investment return there that they've managed to do. But yeah.
Yeah, and if we head over to AM Online and staying in the used car supermarket sector, the headline there is Motorpoint fights to stem losses, £1 million cost of redundancy. So this is based on a trading update that was released over the course of the week, and it does show that Motorpoint has been cutting jobs, reducing stock purchase costs, and halting its expansion plans. And AM's coverage says that this is to fight the stem of financial losses, which the national car supermarket chain blames on difficult macroeconomic conditions. And this is very much an update on a story that we ran probably 2-3 months ago when it was their last update.
Yeah, it's a shame really, because they were really accelerating work there, and they probably started to expand very, very quickly in terms of other territories and growth. They'd opened their 20th car dealership in Ipswich in just May of this year, but as you say there at the start, they've paused further openings for now. Again, trading difficulties, it's getting hold of the volume of stock and that pricing pressure as well in the market for vehicle, particularly supermarkets of this scale. But again, seeing Motorpoint over the decades, everybody has these tough times and they've survived and come through it, and they'll make the right strategic decisions to get through this and come out on the other side and ready to go again with further expansion, I suspect. But one to keep a close eye on as it develops.
Yeah, definitely. So the half-year financial results are actually out next month. So we'll see how effective they've been. And there's some strong words there from Mark Carpenter, CEO of Motorpoint, who really blames a lot of this on the impact of high inflation, high interest rates, and consumer uncertainty. So that's a combination that no car dealer wants to see, let alone a business the size of Motorpoint.
Definitely. So you might have noticed with no men able this week, and that's because Stephen is over in the US at the minute. He's over the pond there. So men able will be returning as usual next week. So do stay tuned next week for the return of Men Able Moments with Stephen Whitton. I'm sure he'll have something to share from his experience over in the US there, that he's on a trip over there at the minute.
Yep, everyone's on holiday apart from you, Phil.
Yes. I've had mine. I'll be all right.
Yeah. But that's all for now. Many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
You've been listening to Motor Trade Radio podcast, powered by eBay Motors Group. We'll be sharing all the links from this week's headlines on Monday morning. So to make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.